Hey traders, and welcome back to another weekly video here. Usually I do these on Sunday, but we're doing it one day off as the markets are closed and very, very quiet just after Christmas here. So what we're going to do is we're going to do our usual weekly video where I take a look at setups and ideas for the week ahead. This one a little bit different just because we have the holidays and markets are very quiet during this time. I'm going to give you some setups and things that I'm looking for, not just necessarily right now, but in the coming days, weeks, and I guess the next month or so. So where I would like to start here is to discuss a little bit of what's been going on, bigger picture with the US dollar. Now, many of you guys have followed the story on the channel of, we were very bullish this year on the US dollar. 2023, I'm not necessarily so bullish going into the new year. In a broad spectrum, we saw a very impressive year to the upside for the US dollar. Why is that? Why was the dollar so strong? Well, it was because CPI was red hot in the US. And, with that, the rates, right? We're also seeing a rapid increase here in the United States from the Federal Reserve. Both of these things, in fact, outpacing many other countries in terms of the interest rate, the hikes that were going on. It made the dollar very, very favorable, as not only was it offering higher interest rates, which is attractive to a currency, but also because, of course, it is the big safe haven currency among, on the block, if you will. It is it's the big kid on the block, is the U.S. And the economy that is behind it, right? So the dollar was so red hot in 2022, but in 2023, what has changed? Well, I did a little tweet that I wanted to share with you guys. By the way, if you don't follow me on Twitter, make sure to do so. It is a fun time over on Twitter. If you go over here and you take a look at my profile, I posted something here today, which I thought was kind of interesting. Basically, I said inflation seems to be cooling in the U.S. As of now. It has been falling since the peak in June of 2022. And in my opinion, this pauses dollar bull trades for me, as a sigh of relief from the Fed may cause their outlook to be less hawkish. So if you guys don't know what I'm talking about here, if this is a lot for you, new traders, basically inflation is a thing that of course is bad, right? Markets don't love inflation. And with inflation, there comes interest rate hikes. Interest rate hikes are positive for the currency. You can look that up if you'd like to. But again, overall, that was very bullish for the dollar. But inflation, as shown in that graph I just showed you, has been on the come down. We can actually go take a look at it inside of the Edge Finder, which is where I got that information. If we zoom way in here and we filter by US dollar only, you can see that inflation has, in fact, sort of peaked in June. And is that the peak for the entire, next year? We'll see. But so far, it's looking promising. And with that promising decline, we are seeing the dollar, of course, also decline. So when we go look at the dollar chart, overall, to me, the dollar looks pretty dang weak, right? We've been seeing consistent lower highs. And so where do we take that if we have a bearish bias on the euro dollar, on the dollar? Well, when we go look at euro dollar, it's more on the other side of the coin, looking to be predominantly long on things like the euro against the dollar. The gold market especially is something that I'm going to be watching going into the new year. And when we zoom in here on the daily chart, you can see we've totally flipped that downward structure, which, by the way, we made good money being on the short side of this euro dollar trade. This was predominantly one of the main things or main vehicles I used to be bullish on the dollar last year, or I guess this year, sorry. I'm getting ahead of myself. It's not 2023 just yet. But we've sort of seen that flip, and the euro has been very, very strong. So for me, what I'm looking at for going into the new year is maintaining a bearish presence, I guess, on the US dollar until something changes. And again, what I mean by that is until you start seeing structure change back the other way and the story flip back to the dollar bullishness case again, looking at levels like this predominantly as bullish pullbacks, if anything, right? So if the euro gives us a pullback, I'm not going to be afraid to say, hey, you know what? Dollar is still looking overall weak fundamentally. These could be opportunities to attempt longs against the dollar and in favor of things like the euro. Another one that sticks out to me is the NZDCAD, right? This one, same sort of concept. We had a very strong run up. Sure, we've had a little bit of a decline, but we'll wait to see if we can actually get off the daily chart some reaction, which we have started to see. We'll watch that one going into the new year as well. Now, a big one, of course, is gold. And this one has partly been my one of my main things I'm focusing on recently is the gold market, and actually been bullish on the gold market, just sort of as a momentum play recently, with the dollar sort of cracking its indestructible upward trend. The primary one that I've been interested on the long side has actually been gold, and we've caught a little action on gold inside of the VIP group. I've been paying attention to gold a lot, and so far so good, right? We've seen huge breakouts, pullbacks, support has held, breakouts again, pullbacks, support has held, right? We've sort of held this area here around 1770. And so for me right now, gold continues to look bullish until further notice. So for those of you guys who are watching the gold market, same concept. This story with the dollar is not just unique to euro dollar or NZDUSD. It's all USD crosses, including that of gold, which has seen, this major downtrend in 2022. Sort of seen that reverse, right? You had this long-term downward structure that fell apart here as buyers took control of this chart again. And so for me, until that changes, and again, change would be breaking support, right? If we see support levels broken, then that's a different story, and we'd have to reevaluate what's going on with the dollar. But for now, bias maintained to the upside with gold and with the bearish thesis on the dollar. I think it gives it some room here. Now we can shift gears and see what else we want to look at. So I have the watch list, of course, and I'm going to go ahead and if you're not familiar with this software that I'm using, this is called the A1 Edge Finder. It is our market scanning software that my team has built. I run a software company where we build tools and automation systems for traders. And with the Edge Finder, what we can see here is it generates this watch list, all these different assets on this list on the far left corner. And it's giving us, with each one of these, a bias, whether that be a strong buy, a sell, or a strong sell. And that's based off of this score column, and then the consequential columns to the right of that. That's what's basically contributing to the overall score. And there's a lot here to unpack and try and make it quick, but from just a perspective of the from the watch list, the $1 cross that is, of course, interesting is the dollar CAD. And this is the only one I would say has some potential to the long side off of the daily chart. And this is actually mostly just a very, very weak Canadian dollar recently. And so we marked up this chart in the last live stream that I did before the holiday break. And basically, we've seen support, support, support. If you're a range trader, there might be something here, but for me, what I pointed out with the dollar CAD would be breakouts above the previous high could start some New Year's trends. For those of you who are watching USDCAD, that's one to pay attention to. But again, as we speak, I'm waiting for things to sort of break out and present some trading opportunities, if nothing else. On the flip side, we have things like GBPUSD. Let's go look at pound New Zealand, which has a bearish bias. Again, this is what happens during the holidays. We get incredibly choppy. So nothing on the choppy side there, or at least from the trading perspective, there's nothing here until we start seeing breakouts, right? So if you start seeing a move past levels of resistance, or in this case, levels of support, then we might have something to work with. But really, ideally, what I'm looking for is going into the new year, I'm looking for some big explosive moves to join, if nothing else, right? I'm not looking to trade this, right? Because this is just messy, choppy charts. I'm looking for big explosive moves, and they will happen. Very often in the new year, we get some new trends, we get some volatility that picks up, and there's some money to be made. But primarily looking for some strong breakouts, looking for pullbacks, looking for continuations, both on the swing trading and day trading side of things, looking for that volatility to pick up before I try and catch a move. Because this is a very tough week for many traders. Many traders will try and force trades this week and will get caught up in the choppiness, which is a very especially nasty place to trade. As spreads widen, markets don't follow through very often. It's quite messy. So not something I'm looking to aggressively participate in. Let's see, what else can we get into? Some other ones that were sticking out, I know someone in the chat was talking about Aussie Swiss here, which we can look at the daily chart and just get an overall view. So we have this downward trend going on. There may be something here. Actually, this does not look too bad. Looking on the sell side here, we have structure, and we also, I believe that's going to be a 61.8% retracement. Yes, it is. Look at that. So you got a 61.8%. That's a pretty clean setup there on the AUDCHF currency cross. And let's go look as to what is making that considered a sell. And this is a good example of how the Edge Finder works. What we'll do is we'll go to minor currency crosses. We'll go to AUDCHF. And let's take a look at this one. So what we see here is that this thing gets a sell bias and a negative score on our little speedometer visual graphic. And we go through the list really quick. What you can see is that under COT data, we don't get much of a bias. Retail sentiment though, the crowd, and we can see it in this bottom right area here, the crowd is buying AUDCHF, which is of course a bearish signal because we know that retail traders tend to lose money. And so if we know they're on the long side, okay, that points us, let's be actually more biased towards short. So that one makes sense. If we take a look at seasonality, the month of December and January, by the way, tend to be negative months for this currency pair. So we have negative expectancy in terms of historical trends, what they have to say, right? Seasonality gives us that -1, retail sentiment gets us -1, but trend is also a big one that is factored into the Edge Finder, and we can see there's a pretty clear downward trend there. GDP growth and interest rates favor the Australian dollar, but inflation and unemployment stats favor the Swiss franc or Switzerland, right? So that gives us an overall -4, gives us a sell bias. And what we're really doing here, you guys, is if you're new to the Edge Finder, if you're not yet trading with it, many traders are using it to essentially help them spot more confluence in their trading. We're combining technicals, which is what most traders are familiar with the fundamentals and sentiment analysis and automating that process. So again, we've looked at what the crowd is doing. We've looked at what essentially the trends have to say in terms of seasonality, in terms of overall directional trend. And what we can see is that for me, this would actually be considered a potential sell setup going into the week. So if price were to pop up into that 61.8% retracement, that could be an area at which I look to potentially get short and look for some continuations. I think for me, stop loss wise would probably have to go just above here, above 63.20 at the very least, right? That would be my stop out point to just say, hey, you know what? If this happens, trade is no longer valid, and my thought process of this area was incorrect. So that's where we would cut the trade, basically. That's what I would be focused on there. But I will say AUDCHF, one of the more appealing trade setups on the list here today. So we'll go back to the watch list and see what else we can find. This is essentially, by the way, how I find all of my trades. And if you guys don't already have the Edge Finder, if you would like access to it, we do have a sale going on right now. Down below in the description, if you click that link to purchase the Edge Finder, if you want access to this tool, there is a code that you can plug in when you check out, YTVIP. If you plug that in at checkout, you're going to get a discount off the product, and it brings the cost down for you as a subscriber on the YouTube channel. So if that's something you're interested in, check it out, read more about it. I want you to make sure you know all about the tool before you purchase it. It is not a holy grail system, but it is an excellent scanning software that many, many traders are using, and we've had a tremendous in terms of response. We've had a great response from the community of traders who use it. So highly encourage you to check out the tool down below in the description if that is something that you're interested in. Pound USD also on the sell side. Of course, let's go look at Pound USD here. The pound seems to have lost a little bit of its speed, and I'd like to see what's contributing to that Pound USD bearish reading. And one of the big ones is the smart money tracker seems to be focusing its attention more on the sell side. So people are selling, or big money seems to be selling the pound, although there has been a bit of an increase. We'll have to watch that in the number of, or in the change in long positions. So that's something to note. But in terms of looking at the dollar, of course, the dollar continues to be relatively highly longed by institutional traders, and the pound is still mostly short from institutional traders. So now looking at the chart, what we can see is that we had this beautiful uptrend and it cracked right here. And you can see if you caught that break, then congratulations, that's an awesome move. It's been drifting lower. Even despite the holiday season quieting markets down, we still saw some pretty good follow through here after that breakout of that upward trend. So where does that take us going into this week and into the new year? Well, if we draw a fib from the top to the bottom here, it's a choppy one, but you have that 50% retracement that could be of interest here. And that's again off of a broken upward trend, pullback, looking for continuation there at the 50%. That's about a 1.2218 is the price there. And then for me, same concept with Aussie Swiss. Stop out point is going to be above probably the 61.8% retracement. So in that case, if price just goes like that, we're out of the trade with a small loss there, and then looking for the next one, right? So that's how we're approaching pound USD here going into this week. Yes, it's kind of in an uptrend, so I would be very cautious with this one, but we've got some signs of broken upward structure. The next major area of contention, I would say, is probably paying attention to this area here at demand at 1.1933, right? So this zone of support here could sort of be a loose target. So if price does something like this, right, there's a nice little gap there. And let's see, that is a distance of about 275 pips. So that's not bad, right? So I think that might actually offer some opportunities going into this week and going into the end of the year. Let's see what else we have. We'll go back to the watch list. Anything else? So Euro pound was another one that might be interesting, but let's also look at Euro CHF. I'm gonna guess that this one is probably pretty choppy, as it tends to be. It is, but we did have a clean break here. That's a pretty nice breakout for this currency pair, which is notably choppy. This one tends to be very, very back and forth. As you can see just in recent price action, failed to break through lows here, and now breaking through the highs, showing some buyer strength. I don't love this one from a price action standpoint, but if it starts moving a little cleaner with some conviction, right, big moves, right, straight shot movements and then pullbacks, that would be a different story. But we'll go back to the edge finder. NZDCAD, another one considered on the list as a strong buy. So NZDCAD, we're taking a look at the daily chart. This one is pulling back here. Don't love this one because there's not too much structure that I see in the near price future. So even if something is on the edge finder as a potential buy, right, it doesn't mean I'm just going to go buy it outright. The software tool is not designed in that way. It is designed to give us general directional bias. So it's telling us, based on the factors that it has, it likes more on the long side than on the short side. That's all it's telling us. It's not telling us, ooh, buy it right here, and you're going to make instant profit. It's not what it's all about. It is a scanning software. So for me, if anything, this would be a little higher. This would definitely be a higher time frame trade, right? 38.2% retracement, or somewhere between there and the 50%, which looks extra juicy. Could offer some continuations, but more for my swing traders out there who are interested in longer term plays. Let's keep going. We'll take a look at one more. AUDNZD might be another one to quickly look at. If I could type AUDNZD. So this one on the sell side actually looked pretty clean. This is comparably speaking to all the other ones we've discussed. This is a pretty cleanly trending chart. We had a big shoot to the downside followed by a run up here in the last week or so. So where's a possible short zone? Let's see. So we have this zone here. This was a major contention point for sellers before an explosive move down. So if that does come back, this is definitely also on the swing trading side of things. But if you were to draw a fib from this previous high here, before we had this really strong downward trend, that 61.8 looks pretty clean to me. So if I'm drawing this area, we tighten this up just a little bit, you can see 61.8% in an overall downtrend on the daily chart. Right, if price pops up into that area in the coming days or weeks, something like this could actually be a pretty decent opportunity for something higher time frame. Biggest pro about being a swing trader is that if you catch a swing, you can sit in a trade and just it does all the work for you, right? If you catch something like this and you enter that trade and it does in fact, just trickle down, it does another one of these, you're going to be sitting there in a fantastic profit. And if we were to draw this line here, and I can just take that and draw it, assuming we caught the perfect top, which is a big assumption, that would be 600 pips, just shy of 600 pips. That's an incredible move to the downside. So just something to think about. That's the pro of swing trading. And, of course, you're only paying for one trade, right? Commissions wise and spreads wise and that sort of thing. It is a pretty cost-effective way to trade, being on the swing trader side of things. So there you go, guys. Again, remember, if you want access to the Edge Finder, take advantage of the sale down below in the description. If you enjoyed today's video, hit the thumbs up button. It really does help the channel. I appreciate you for tuning in, and we'll see you back next time.